Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 6, 2025, and we're diving into TKO's third quarter earnings report. TKO, a leading sports and entertainment company, has just released its Q3 2025 results. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. TKO's latest earnings report is quite intriguing, especially with their recent acquisitions and strategic moves in the sports entertainment sector.
Revenue and profitability overview. Let's start with the top line. TKO reported a revenue of $1.12 billion for Q3 2025, which is a 27% decrease compared to the same period last year. However, net income saw a significant increase. John, can you explain this contrast?
Absolutely. The revenue decline is primarily due to the absence of the 2024 Paris Olympics, which had boosted last year's figures. Despite this, TKO's net income surged to $106.8 million, up from just $3.4 million last year, thanks to a substantial reduction in operating expenses, particularly in direct operating costs.
And what about their profitability metrics?
TKO's adjusted EBITDA increased by 59% to $362 million, with a margin expansion to 32% from 15%. This improvement is largely due to cost efficiencies and better performance in segments like WWE and IMG.
Segment performance analysis. John, let's delve into the performance of TKO's segments. How did UFC, WWE, and IMG fare this quarter?
UFC's revenue decreased by 8% to $325.2 million, mainly due to fewer events compared to last year. On the other hand, WWE showed impressive growth, with revenue increasing by 20% to $402.1 million, driven by higher ticket sales and media rights. IMG's revenue dropped significantly by 59% to $336.7 million, again due to the absence of the Olympics.
It seems WWE is a standout performer. What contributed to its success?
The success of WWE can be attributed to strategic media rights deals and successful live events like the two-night SummerSlam and WrestlePalooza, which boosted both ticket sales and site fees.
Strategic initiatives and future outlook. TKO has raised its full-year guidance. What are the key strategic initiatives driving this optimism?
TKO's increased guidance reflects their confidence in ongoing strategic initiatives, including landmark media rights deals with Paramount for UFC and ESPN for WWE. These deals are expected to significantly boost revenue streams in the coming years.
How do these deals impact TKO's future outlook?
These agreements not only secure substantial annual revenues, but also enhance TKO's market position by expanding their content distribution. The Paramount deal, for instance, is valued at $1.1 billion annually, starting in 2026, which is a major win for TKO.
Financial health and capital management. Let's talk about TKO's financial health. How are they managing their cash flow and debt?
TKO generated $460.8 million in cash from operations, a significant increase from last year, leading to a free cash flow of $398.9 million. They have a strong cash position, with $861.4 million in cash and equivalents, although their gross debt stands at $3.759 billion.
What about their capital management strategies?
TKO is actively managing its capital through share repurchases and dividend increases. They've announced an $800 million accelerated share repurchase program and doubled their quarterly cash dividend, reflecting a strong commitment to returning value to shareholders.
EPS forecast and market reaction. John, analysts had forecasted an EPS of 55 cents, but TKO reported an actual EPS of 47. How has the market reacted to this?
The market reaction has been mixed. While the EPS miss might concern some investors, the overall positive outlook and strategic initiatives have kept the sentiment relatively stable. The share price has experienced some volatility, reflecting the mixed investor sentiment.
Do you think this EPS miss is a significant concern?
Not necessarily. While the EPS miss is notable, TKO's strong operational performance and strategic positioning suggest that they are on a solid path for future growth, which could mitigate concerns over the short-term EPS miss.
Key takeaways. In summary, TKO has delivered a robust performance in Q3 2025, with significant improvements in profitability and strategic positioning. Despite a revenue decline, their net income and adjusted EBITDA have shown impressive growth. With raised full-year guidance and strategic media deals, TKO is well-positioned for future success. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing TKO's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on TKO's performance in the comments below. Until next time.